If you're a parent or grandparent, you're always thinking about it, right? How to give the kids in your life a real leg up. Well, today we're going to explore a strategy that does exactly that. It's a financial head start that's designed to last a lifetime. Let's dive in.
It's a question a lot of us ask ourselves. I mean, we give gifts for birthdays and holidays, but what about a gift that actually grows with them? Something that provides real security and opportunity long after the wrapping paper has been thrown away. That's what this is all about. Okay, so the secret sauce here, the main tool we're going to talk about is whole life insurance. But hold on, we're not just talking about a safety net. We're talking about using this product in a pretty unique way to build a tangible, growing asset for a child's future. So what's the difference? Well, a lot of people know about term life insurance, which, it just covers a specific period of time. Whole life is different. It provides coverage for their entire life. And here's the kicker. The premiums never go up. And that stability, well, that's the magic ingredient that makes this whole long-term gift strategy work. All right, now this is where it gets really interesting. It's a feature called cash value. The best way to think of it is like a built-in savings account inside the policy. A piece of the premiums you pay gets set aside to grow, creating this pool of money that can be used down the road for big life events. A policy started for a little kid could grow into a serious chunk of change by the time they need it for college or their first house. It's a gift that literally grows. So how does this all actually work? This strategy is called KidStart, and it's surprisingly simple. It's a really efficient way to give a child a major advantage. Let's break down the steps. Okay, so here's the game plan. It's just 3 simple steps. First step, you get a whole life policy for a child or grandchild while they're young. This locks in the lowest possible premiums for life. Next, you pick a set time period to pay off the policy completely, say 8, 10, or even 20 years. And the final piece, once it's all paid up and the child is old enough, you can transfer ownership of the policy over to them completely tax-free. And this is the payoff. This is what it's all about. Just imagine handing your child or grandchild a fully paid-for financial asset. They own a life insurance policy that has a growing cash value, and they will never have to pay a single premium for it, ever. I mean, that is a serious financial head start. So what can they actually do with this thing? That's the big question, right? Because it's not just a piece of paper, it's a key that can unlock huge opportunities and provide a real safety net as they start navigating all those big moments in adult life. Let's talk real-world stuff. That cash value we were just talking about, well, they can tap into that to help pay for university or use it for a down payment on their first home. They could even use it as seed money to start their own business. It becomes this flexible financial resource they can always count on. The source material for this explainer put it perfectly. It's not just a gift for the child. This strategy is also a super effective tool for moving wealth between generations. It's a structured, safe, and really efficient way to pass assets down the line. Okay, ready to level up? If you want to make this gift even more powerful, there's a more advanced way to fund the policy that can really boost its efficiency. Let's check out how that works. The big idea here is using another financial tool, called an annuity, to basically pay for the whole policy up front. Think of it like this. You put a lump sum of money into the annuity, and it then generates a guaranteed stream of income that automatically pays the policy premiums for that entire term you chose, whether it was 8, 10, or 20 years. The whole thing is automated, and it can save you a lot of money. And here's the bottom line. By funding it this way, with an annuity up front, you could save 18% or even more compared to just paying those premiums year after year. It's a way to make your gift that much more impactful. Now, obviously, a strategy like this has a few moving parts, and it's always smart to get advice that's tailored for you and your family. So if this is sparking some ideas, the best next step is super clear. Reach out to a financial advisor and ask them specifically about the KidStart strategy. So as we wrap up, let's circle back to that first question we asked. What's a gift that truly lasts a lifetime? This strategy, well, it's a pretty compelling answer. It's security, it's opportunity, and it's a legacy that just keeps on growing. So the final thought I'll leave you with is a simple one. Could the best possible financial start for them start with you?